Hey guys, it's Steve from the equitiesetc.com slash microefutures.com trading room community. I'm going to be going over today what I call a early pre-market, also early opening market, short play that has been working in the market of late. It comes from one of All Day Ray's back-tested, custom-coded trade idea scan called the Joe Pesci 2 times scan, called Joe Pesci because Joe Pesci is short. And the scan that Ray has coded um, is a short scan that has been working extremely well, back test very, very well. If you're in the room, you've seen the back test actually in action with us. But what we've been noticing early pre-market as well as late pre-market into the open is a certain setup play that has been much more favorable lately in this market of late. So we're going to discuss it a little bit, and we're going to use an example of a trade on this past Friday that we took pre-market on ALZN. So again, it alerts on the Joe Pesci scan. Okay, we're going to call this strategy the Pesci Whack shorting scan or shorting play. So it's going to be called Pesci Whack. Get it? Whack, Pesci, Mafia. Ha ha ha, my bad jokes. But in any case, this is what we're looking for. The Joe Pesci scan finds stocks that are gapping up overnight. Follow my cursor here. What you will see, okay, in this tan area is the pre-market. The light brown area is pre-market. This grayish blue area is the previous days after hours. This white is actually the regular trading hours. So we're in the pre-market now. Stock is gapped up on news. Okay, so we want to take a look at what the news is, right? Normally, if a stock gaps up this much, all right, the folks that own this stock previously, okay, are probably looking to sell. Like if you own this stock from the day before, right, say on Thursday, and this stock pops up so much pre-market, all right, from $2 up to almost $1 to $3.40, a lot of individuals are going to take advantage of that, especially if there's some sort of news. And then smart money is going to sell because retail traders are going to wake up. They're going to see that it's gapped up overnight, and retail traders being dumb money are going to continue buying it. They're going to want to get in on this big green candle thinking it's going to keep going up. Smart money realizes that. Smart money knows that they have liquidity to sell into. So the thesis is that smart money will sell into it. However, that doesn't always happen, as we know. A lot of the time, especially if low float, these stocks can spike up throughout the day. But we've been finding certain patterns where that's not the case. So the first pattern that we want to look at is we do look at the stock because we tend not to want to play stocks that are lower than 20 million float size. And we see on this stock, right, when I look at the profile, it's around 38 million. Now, why don't we want to play stocks that are lower than 20 million? Because it doesn't take much to move the price, especially if we're looking at a pre-market or even early after the open, right? Pre-market, early open, low float stocks can pop up and down rather quickly. And it really doesn't give us an edge or give us an opportunity, right, to play this. So we see that it's above 20 million. So we like that. Now let's see what the news is, right? We see that the news is that they had positive phase 1 trial. Now we mentioned on a previous video I did, as well as we mentioned it in the equitiesetc.com trading room. And yes, I'm throwing out the plug to the crew out there at equitiesetc.com slash microefutures.com. We talk about it all the time, how phase 1 and phase 2 trials tend to give up their gains. And they tend to give up their gains, okay, simply because all a positive phase 1 or phase 2 trial means is they have to go to additional phase trials before the FDA can give them approval. So a phase 1 will have to go to a phase 2, and if that's successful, a phase 3, and then from phase 3, the FDA can approve and they can go to market. So knowing that this is a positive phase 1, we know that they have to run next a costly phase 2 trial. We also see here that they only have $13 million in cash left. A phase 2 trial can run anywhere from 20 million all the way up to 100 million. Don't quote me on it. Just think that it's expensive. So a lot of times what stocks will do, and it's usually higher price than this because this is only a $3 stock, that will use a price run up to then issue dilution, a cash raise to get the needed cash. And obviously if they issue a cash dilution, that will drop the stock price back down. So do I know that's going to happen with ALZN? Of course not. I don't. I'm using that as a general thesis that a lot of times that you will see a lot of phase 1 and phase 2 positive trials give up their gains. All right, simply because down the road, they're going to have to raise additional money through a cash dilution. And smart money knows that. Okay, so do we short every phase 1, phase 2 trial? Absolutely not. But we look for those that are low on cash. Also, and low on cash should be under 50 million, but low on cash, afloat above 20 million, that will have the following pattern that we're going to discuss. But let's first look at the news, right? We saw that the news was phase 1, so that's checked, box is checked. We know that that's a catalyst that really doesn't justify this price increase. Although the stock could go higher throughout the day, no one's questioning that by no means. All right, we're talking about this period in time where you see my cursor. Okay, the pattern we're looking for is simple. The black here, and follow my cursor, is VWAP. The orange is the 9 EMA, and the green is the 20 SMA. What we're looking for is after the first 5-minute candle, after the spike, this is a 5-minute chart, we want to see VWAP and the 9 EMA a good distance apart. See where I'm moving my cursor? It's a good distance apart. We also want to see the 9 EMA and the 20 SMA a good distance apart, because eventually throughout the day they will come together. But right now we're looking for that distance, that space between VWAP, 9 EMA, 9 EMA, 20 SMA. After that first candle, it's green, right? The second candle we're looking for to be red, followed by a breakdown under VWAP. So when we see a spike, goes above VWAP and then comes below it, we're looking to short it because a lot, and we wait for the candle to close, right? We don't just take it if it just drops underneath VWAP. It's a 5-minute candle, so we wait for the 5-minute candle to close. Just like a baseball game doesn't end in the 4th inning, they have to play all 9 innings. If we're using a 5-minute candle, we wait for the 5-minute candle to close. When the 5-minute candle closes here and it shows us it wants to stay underneath VWAP, we take the short. With the thesis is the 9 EMA has been acting as a magnet in this market of late. So when it drops down to the 9 EMA, we're in our short. What we're looking for now is 9 EMA to act as support, okay, as resistance, excuse me, to our short. And at this time, it's perfectly okay to cover half your short to lock in profits and keep the other half if in case it wants to break it down to the 20 SMA. There's a lot of times it will pop back up. So we'll cover half our short. We'll move our stop now back to our entry price up here. So we're free rolling this trade. We can't lose. We locked in half, okay? Might not be a big gain, but we locked in half. We move our stop back to our entry point now, all right? And then we wait for the stock to drop and see what it wants to do. Either we get stopped out. In this case, we didn't. It wound up breaking under the 9 EMA all the way to the 20 SMA. And this is the formation and style we're looking for. Now, we don't just play the pattern. A lot of people think you just play the pattern. This is the pattern we're looking for. Gap up, price above VWAP, break below VWAP, good distance to the 9 EMA, cover half at the 9 EMA, move your trail for the rest of the half to your entry point. So now you're free rolling it and hope that it drops down to the 20 SMA. And then you can get yourself out when it starts slowing down. Okay, that's the thesis. That's what the pattern looks like. Next, we want to make sure it's above 20 million, give or take. Okay, and then obviously we want to make sure that it's not totally legit news. If it's totally legit news, like positive earnings, and the market is reacting to the positive earnings, we wouldn't short it. We're looking for news that's either fluff or news like a phase 1, phase 2 trials that we know that it will be giving it up. So hopefully that makes sense. If not, we discuss these every day in our live trading desk room at equitiesetc.com. So please stop by, ask us questions. We go through these trades live. And if you're a member, feel free to post if you don't understand what I just said. Okay, so this is what we call the PESCI Whack play. That's PESCI, as in the PESCI scan it is coming from, and that's another key. We want it to be coming from either the PESCI scan, or if you're in the room, the other short scan we use early on, which is called the Algo Blessing scan, that is raised 2 scans. We want to make sure it's coming from the PESCI scan, meets the criteria that we just mentioned for float size, as well as news, and then obviously this pattern setup that we're looking at. Okay, thanks everyone, and I will see you in the rooms.